Good morning, everybody. Just give me 1 second and we will get started. Good morning, good morning. Yep, first is yours. All right, once we get a couple more in here, I'm going to share a link, which I'd really appreciate if you guys could share around throughout the rest of the trading session with new viewers and everything. But today we're going to be focusing on really strict guidelines of how to take a 0 DT trade, okay, or a day trade, however you want to define it. Now, this link, hold on. So this link's gonna have two parts to it. Okay, so don't press this first part of the link yet. You have to paste this at the end to make that the full link. It won't allow me to post it all. If you guys could grab that and share that around throughout the rest of the trading session, that would be great. But once everyone opens that up, let me go ahead and get this open for us on the screen. Now, this is going to be very bright white, so just a warning, in case everyone's looking very closely at their phone early in the morning. 3, 2, 1. Okay, so we're going to be going over kind of my rules or slash laws that I use to 0 DT trade. Now, there's a lot to, you know, obviously to 0 DT trades, but we're going to make this very simple, okay, and follow these rules. So give me a second. I need to fix this reset transformation. Let's drag this out and hold on. All right, just 1 second. Okay, everybody should be able to see that. So it's okay if you're only using 145. You're going to focus on a single contract at a time. Good morning. So going over the rules really quick, we have about 11 minutes until the start of the market. We will go over that, so don't worry about that. But the rules are very simple, okay? And these four rules need to be looked at and basically followed to a T for every single trade, okay? So the rules are, I will only enter calls below the 5-minute lower Bollinger. I'll show you exactly what I'm talking about in a second. I will only enter puts above the 5-minute upper Bollinger. I will only take between, it says 2 to 4 contracts per entry. You can literally keep one contract if you have a smaller account. Okay, so I'm gonna have to share that image somehow. Maybe if someone's downloaded it, they can share a link through like I don't know what the picture services are anymore, but if someone could share that in chat, that'd be super awesome. Um, And then the fourth one is that when we get to the 5-minute 20 mile, we're going to exit about 80% of our positions. Now, if you only have a single contract, that means you have to exit all of your positions. So if you want to take a picture of this screenshot really quick, um, we will find a way to share it out for everybody in chat who wants to, actually have it on their side. I highly suggest getting this printed out once we do share it out. So I'm going to turn this off. I'm gonna have to get a link. I'm gonna have to find a way to create a link for it. Um, Hold on, I'm gonna post it on my Twitter. That's what we'll do. Give me 1 second. Okay, so it's on my Twitter, at Cups and Handles. Let's see, I think I could share this in chat. All right, let me know if that works, everybody. So those are the rules we're going to be following to a T, okay? Every single trade we take today is going to be the exact format of that. So we're going to look at yesterday. We're going to look at the 5-minute time frame, okay? And we're only going to show when the market was actually open. So I'm putting a kind of a lock on this just so that we can really just define what time the market was open and go over that. Okay, so for yesterday, and this is the 5-minute time frame, my Bollinger settings are set to length of 20, width of 2, so you'll be able to see the exact same entries and exits that I see. Now, we're going to go over first the call entries. Okay, so yesterday we had a few different call entries. We had one pretty much right at the open. My laptop's going to let me. Ah, everything's fighting me right now. Okay, we'll get through this. We had a call entry there. As you can see, it's below the lower Bollinger. That means we take calls. Where do we take those calls to? The 20 mile. Okay. So there was a 100% consistent trade right there. There was also this little this is very hard to count as that. But we were talking about this in stream and we were looking for this level very, very, very specifically. But from the lower Bollinger to the 20 mile. Now, obviously, there's more room to run. Okay. Obviously, you guys see that, the market ran up all the way from 737 to 744. Okay, almost 745. Now, the thing is that we are trying to focus on super, super, super consistent trades. So, unless our entries are very clear and open, I don't know why my computer's lagging so bad today. Unless the entries are very, very specific and clear and open, then we do not enter. Okay, this is the rules of this trading style is that we focus very, very specifically on our entries and we focus very specifically on our exits. Now, for smaller portfolios, obviously you're not going to be able to have the amount of contracts to be able to catch the run, which means the price action after that 20 month. Okay, so for the call up side, you wouldn't be able to claim that for a smaller port, but it's okay. All you have to do is these smaller trades for, 10, 20 sessions, and then you'll start having enough money to get the contracts to be able to catch some of these runners. Okay, some of this runway. Um, so that's for the calls. Okay. Now, there's obviously room on both ends to make money. So now we're going to look at the puts. If my is giving me so much trouble today. Now the put entries we're going to mark in purple. No, we'll mark it in red, a little easier to see. So from the top of the upper Bollinger, we see that we get our 20 mil. Very consistent trade there. We're going to make this arrow I don't like that. It's hard to see. We'll make it light purple. From the upper Bollinger to the 20 mile. Now, you might not think that these wins may not be very large. Sometimes they're not, but it's not, again, about having the super large win. That's not how you're going to become a consistent trader. It's about being able to consistently win. Now, we had a little bit of overextension yesterday, and I will go over the market in a couple seconds here, which gave us two different put entries on the same level before we even saw the downside. Now, for this type of entry, our rules still dictate that when the upper Bollinger is pushed, we take puts. Okay, so yesterday this was literally one of the largest trades I've ever had. Okay, I mean technically it was the largest trade I've ever done. Um, it doesn't even look that great either, which is surprising to me. This looks terrible. Um, but I bought a ton of puts at this level, looking for the 20 mile. Well, this got extended and this kept pushing, 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 which meant that the 20 mile was pushing up. So we also had to target a higher strike. I was originally targeting the 739 puts, and so I had to add to that when we got to the second upper Bollinger move. I had to add to those puts and take a new strike. And what happened? We ended up having a massive pull down. Now, again, I did take a lot of the profit at that 20 mile range, but I was still able to capture pretty much this entire downside. And eventually, when you have your portfolio large enough, you'll be able to capture both ends like that. Um, so that's what we're going to be focusing on today is very strict entries, very strict exits. I'll be discussing exactly when I enter, what contract I enter, what price I entered at, what I'm setting the conditional order for, and we're going to go over the trades pretty much hand in hand, okay? That's the whole goal of today is to focus on very, very consistent mechanics for zero DT trading. Now, I haven't had time to look at chat or anything, so good morning, thank you for joining, but let's go ahead and start looking at the market because we do have a couple minutes. Now, we do have a very large data set coming in today. We're going to try to ignore that currently because we're going to be looking purely for exits and entries today. Okay, so market opens in about a minute and a half, and then we will get into it. Conditional order is is so on Webull and there's different brokerages, but I use market conditional orders, meaning if the price hits, for example, you could set it to say below 4 or 746. Then if that price hits, it's going to automatically market sell that order for you. Now, for today's session, I want you to watch list two different options, okay? And these options will be, hold on, I need to make sure I have them on my screen. It is the SPY 747 calls and the SPY 746 puts, okay? Or the 745 puts, excuse me. We're gonna change that to 746. My levels were a little different at the time. So 745 puts or 746 puts and the 747 calls. Thank you. You guys made that joke about the my wife bringing laptop coffee, but she brought me coffee. All right, anyway, the conditional order. So when that price hits above or below, it will automatically take your contract at the market price. So one thing that usually I would be focusing on is looking at the VVIX, looking at the HIG, looking at things like that. But for today, I am wanting everybody to 100% focus on just following those four rules that we posted earlier. Um, and if you do not have those rules yet, or if you just joined, they are posted on my Twitter at Cups and Handles. Hold on, I want to get this bit watch listed. So again, put on a watch list the 747 calls and the 746 puts. Okay. Now, if we get a push up here into the upper Bollinger, which market's trying to go for, it looks like, then we'll be taking puts at the top. If we push downward, then we're going to be taking calls at the bottom. Again, we're making this very, very, very simple. And I'll tell you exactly when I enter. So don't have to worry about anything too much. Again, today's pretty much going to be a very, very easy trading day. Um, I just kind of want to have everybody watch and see exactly how I take these trades. So we're looking for our upper Bollinger push here. We have a small cup forming, which is telling us that very likely we're going to hit that level. The upper Bollinger is currently at 747.58. So we're looking for above that level. So I'm opening up those 746 puts, okay? And I'm not taking any yet, but I'm just keeping it open because the price is gravitating towards that upside. It's, telling me that our put entry might be coming up here. So I'm waiting for that. I want to be able to catch this put entry pretty much right when we start pushing above this upper Bollinger. Okay. And if we don't push up above the upper Bollinger, then we don't enter. And we're going to be very, very, very specific on our entries. And just a reminder, we do have data in 30 minutes or in 27 minutes. That's going to be very, very key. Not watching chat yet just because I want to make sure we get this entry if it presents itself anyway. If not, then we're just going to wait until the next entry does pop up. So again, I have the 746 puts on my brokerage open, pretty much ready to buy when we hit our level. Okay, because again, we usually don't have a whole lot of time on our entries. Sometimes they get dragged on, but sometimes they don't. Okay, now we're looking like we're getting ready to get our level. So the upper Bollinger again is at 747.63. Looking for that level to be pushed before we take a put. Now there's a lot of upside on the day, so the whole goal will be to have short-term puts and to being able to pick up some nice calls on the bottom. and ride those upward. Still being very patient for our level. There's no need to FOMO into anything. If our level doesn't hit, we don't take the contract. Simple as that. Flip chat for a second. Yeah, you're gonna wait on the calls. I just want you to okay, so you can only take one trade for today, then I would probably wait for the call side, okay? If you can only take a single trade today, then I would definitely try to wait for the call side. I do think that the call side is going to be very strong today. And again, we're just being very patient for our entry here. We're not taking the puts early. Let me go ahead and write out in text what puts. So 7, 6. Okay, we're starting to get our level. So not just yet. The upper Bollinger is currently at the 747.72. So allow that to entirely push. So you should have these puts, if you're going to be taking them anyway, you should have these puts on your screen, pretty much ready to order very, very soon here. And again, we do not take these until they hit our level, even if it's very close to it. Okay, our level has been hit, so we can now go ahead and take our puts. So first entry, and I'm going to mark this. And let me go ahead and see what we got those at. Hold on. So I have those at hold on, 117 per. Might help if I actually type into the box. Okay, so that is our first entry. Now, right as we have these contracts already, the first thing I want you to do is look at this 20 mile. Okay, our 20 mile is currently at the 746.23. So what do I need you to do? I need you to go to your puts and create a additional sell order. For me, I'm doing a market conditional sell order, making sure the price is less than, basically slightly above where our 20 mile is. So that 746.24, let's set ours to 746.31. Okay. Now we don't have to worry about this right now. We have our contract. We have our exit set. So the exit is set to the 746.31. Okay. So if it gets below that price, then it will go ahead and take your put. Okay. Now we did have the 5 mod tick upward a little bit, so that means we do need to edit our order. And we do need to change that to 746.45. Okay, we always want it to be slightly above where we have the actual 20 mod itself. Now we're still pushing into the upper Bollinger here. Okay. Technically this is still an entry, but I don't want you to overload contracts. So again, I keep my blocks within 2 to 4 contracts at a time. So for me, I'm going to go ahead and enter 2 more of these contracts. And again, I have it set to where at least 60% of these contracts are being taken. So since I only have 4 contracts right now, that means I have to set 3 contracts to that sell level. Okay? Which I will have a single contract as a runner if there's room to run. So our target from Upper Bollinger to the 20 mile. We already have our sell level set. We have everything ready to go. We're just waiting for the market price to give us the price action we're expecting. Okay? Now, usually I'd be looking over the HIG and Liquid and BVIX and everything else, but we're not doing that today. We're focusing just purely off of whether the trades are there or not by this our rule set essentially. I will show you that this rule set works without having to look at everything else basically. Now, let me update my average because it is a little higher now since I did take those 2 additional puts. It is currently at 1.19 per. Okay, so our put level is coming up. My puts are doing very well. They're up about 13%. We're just waiting for our level to hit. Again, we have our conditional order set to take most of our contracts at that 746.45, slightly above where the 20 mile is located, because all we want to do is secure profit. Go ahead and take a look at chat really quick. So for the dated puts, we're going to wait for this downside and we're going to um, be tossing a lot of them. Okay, so if Robinhood doesn't have that, then yes, do a limit order, um, and just put that well above where you bought it for. And as we start getting to that range, you just move that limit order up or down. Hey, Bigfoot, welcome. Good morning. Yes, now's not the time to add them anymore. We're not within the upper Bollinger currently. So we need to just be patient. Now, if we do push up to the upper Bollinger again, technically that will be another entry, but currently our price is not there. And I'm just going to have this little arrow as my little tool today. But currently the price is right here. Upper Bollinger's right there, price is right there. That means that this is not an entry yet. Now, if we continue pushing up, then we can tag on another block, which again, we have to decide for ourselves, is that 1 contract, is that 2 contracts, is that 4 contracts? For me, my blocks today, I'm going to be sticking to 2 contracts at a time. For Bollinger is at the 747.81. So we may be getting another entry. I'm going to be holding my current contracts just because we've already entered twice technically. Now, with the 20 mile moving upward, we do have to move our conditional order sell up very, very slightly. So let's move it to the 57. So the 746.57. Okay. Now, technically, we are within the upper Bollinger right now. So if you have not been able to enter a put, technically this is still a range to do so. Now, let's see the 1 minute time frame. So 1 minute time frame, we're seeing a little bit of a cup here, which means that we can have a handle pulling downward to head upward further. Now, on the day today, there's a reason why I have this yellow box marked out. There is a massive cup waiting to form there. Okay. So the goal today is that we're going to take calls towards the bottom to be able to catch that cup top. Now, when we have these extensions like this, and again, yesterday was kind of that example that I showed. I originally started buying puts there yesterday. Okay. Obviously, this kept pushing upward. It's pushed upward pretty heavily. I added more puts there, and this was my largest trade I've ever taken. I mean, this was my largest win I've ever had. I didn't expect it to be my largest win, um, but I still targeted the 20 mile. Still targeted the 20 mile. Okay. Even though we got pushed up on this first entry, when we hit that 20 mile, we built so much IV that these contracts were well, they all were in the profit. I did not sell any contracts yesterday for a loss, and these ones, the runners that I had from both of these, ended up being massively, massively profitable. So even when we have an overextension like that, don't stress out. Just remember, follow the rules that we have. There's only four of them, so it's not a whole lot to go over, but stick to the technicals. Okay. The technicals told us that we had a put entry, which let me make sure I have this on top of that. But I do want you to see the text. And now we simply wait for our 20 mile exit. It could be a handle forming. Um, we're not gonna worry about that. We're just focusing purely on the rules for right now. So for example, if we push down here and don't get the 20 mile and then ended up pushing back upward, we would wait for the additional put entry, take those puts, and then again target that 20 mile again. But our put entry is coming up here. Again, I have a market conditional order set. Mine is set to take the puts at hold on, the 746.57, And that's because our 20 mile is at the 746.57. Usually I want this up slightly above that level, but we do have the 20 mile pulling downward against us a little bit, so that 746.57 range should be very well um within the strike. Okay. And when our level hits, we're just going to let the market just take our contracts. If you have runners, then you can allow them to run. I want to move our level up to the 746.59. Okay, just because I want to make sure we entirely hit this level. And again, I will be cutting out the majority of my contracts. So currently I have 6 contracts. I'll be having them take 4. I'll leave the other 2 to run if there's room downward to run. And our puts are going to be taken any second here. And again, we're just going to be very, very patient for this level. We're not going to force it or anything. Oh, so Iran just told us there's no draft deal. Um, so very likely that's going to take the market down quite a bit. My puts currently are up about 30%, and we have not hit our level yet. We still have our exit set to the 746.59. You can push that up to the 61 if you are feeling a little more hesitant. I think I might do that here. So I set that level to the 746.51. So very slightly above where our 20 mile level is set to. Now, if this is the situation where they don't give us our exit right on the dot, then we're going to continue holding those puts and we're going to wait for the next upper Bollinger push. Add to the puts, retarget the 20 mile. Because again, this 20 mile did not hit. Looks really close to hitting, but it did not hit. We are going to move that put level exit up a little bit just because you can see the uh, 20 mile has moved up slightly. So we do want to be slightly above that level. So again, it's currently at the 746.64. We're going to set ours to 746.67. We just want our put exit very, very, very slightly above where that 20 mile is, but basically right at that level. Should be getting our exit here very soon. Currently, the entry is not there. We'll wait for our next entry, okay? Currently, we're waiting to have an exit for our first put entry here. Just being very, very, very patient. Yeah, if you can't add, then you just sell at the 20 mile and that'd be that. I want to look at the 1 minute time frame. So this should form an inverse cup to the downside, which if that occurs, that's going to be our 746.60. So we're still looking for that exit there. And again, I have a market conditional order set so that if it gets to, I think we have it set to the, I have a phone call, just 1 second, but I want to tell you what level I have it set to. I have it set to the 746.67. So give me 1 second. Just need to mute one moment. Sorry about that. So again, we're being very patient here. Now, if the market again pushes up to the upper Bollinger, then I'm going to add another, set of puts and target the downside again. But not going to be selling these puts or anything until we hit that 20 mile level. There's our selling. There we go. Okay, so went ahead and took my puts. I still have 2 puts left over. Now with these 2 puts, these are runners. So with your runners, the goal is to be able to catch this downside underneath the 20 mile. That may not happen though. And if that doesn't happen, then you will try to exit it around that 20 mo, but give it the opportunity to attempt to push downward first. Okay, but so far we have secured a very, very solid trade. Now, let me check what my exit on those were, because again, I had those. Okay, so I had those sold at 146 per. Okay, so let me mark that down. Sold 10, 6 per. Let me put that into the box already. So for me, this was 4 contracts. That may not seem like a lot of profit, but I mean, how could you turn down making $30 per contract in that situation? Plus, we have runners. Well, I have runners. If you're a smaller portfolio, you don't have to worry about the runners. But with that original entry and exit, if you do this again 10, 20 times, you're going to start building a strong portfolio to where you can, add more of those runners like I'm currently taking. So it's like now some of these contracts I'm selling for 171 per. I still have one left over, which I am waiting to see if we can push down to the lower Bollinger today. Um, but again, using our technicals, using our rules, we secured a very solid trade here. I'm gonna look for this 745.68 to try to exit this last put. Okay. So not exactly the lower Bollinger, but it's at the bottom of a large inverse cup. So I'm gonna set a market conditional order. And I'm going to set it below the 745.75. So 745, what did I say? 745.75, I mean. Okay, so I have that set for that last contract. Now, I don't have to stress about that contract too much. And now what we're looking for is, are we going to push to this lower Bollinger and are we going to get a call entry? Now, some crucial data did just come out, so I do want to take a look at that one moment. Yep, inflation expectations very high, and the consumer sentiment and expectations went down quite a bit. So that was very expected. I don't want to talk about the gamma and the gex today. Um, for today, we're trading purely off of our 4 rules and technicals. And if anyone wants to share that in chat, it is um on my Twitter. But we're focusing purely on those 4 rules, and we're pretty much only going to be trading based on those 4 rules today, just to show that they do work. They're very, very consistent, and if you follow them to a T, you will be a very successful trader. Even in the worst situations, you'll be able to find ways to profit by using this system. So and again, at first, it's not going to be huge profits. As you can see, I only got about $30 per contract at the very beginning. My big money right now is coming from these runners. Okay. Now, when you have a smaller portfolio, fortunately, you don't get the opportunity to take those runners. Um, that's okay. Taking the $30 a contract is fine. If you did that 10 days in a row, that's 300 bucks. Okay? 300 bucks allows you to buy one or two more contracts when we do our entries. So slowly get that portfolio built and you'll be able to take better entries, more entries, things like that. But it's all about the consistency here. And my last put did sell. So I'm currently up $260 on the day. I had 6 contracts. We actually have a call entry here, so I need everybody to pull up those 747 calls that we talked about. We're going to be entering some of those. So for me, I'm entering a block of 4 at 121 per. So I'm going to mark that. 47, 7. Let me see, I said I bought those at 121 per. Okay. Now, from that, and I want to just drag this off to the side. Sorry, that's kind of annoying. We'll just make a note of it. We'll drag this off over here. And again, with this entry, second we take our calls, what are we targeting? Well, we're targeting that 20 mon. So with me having 4 contracts here, what am I going to do? I'm going to set a market conditional sell order for 3 of these contracts. Okay. I'm going to set that level, hold on, above, let's see, 746, 68. So I want that level to be above the 746, 61. Okay. Again, slightly below the lower Bollinger in this case. Okay, and when that price hits, it's going to take, again, 3 of the 4 contracts, and I will have an additional contract to run if there's room to run. Currently, these calls are up about 12%, so already starting to do very well. Did I not have this show? Hold on. I want this inside the box. Okay, perfect. Now, if we continue pushing down in the day, we'll do the exact same thing we did with the puts here. We will continue to add a few more contracts if we push into the lower Bollinger again. But currently, our price is at that level, so this is not an entry anymore. If you did not enter below the lower Bollinger, then that entry is not there. Okay. If you miss an entry, it's not the end of the world. You just wait for the next contract or, the next entry to open. So you have to determine that entry amount. If you have a smaller portfolio, I would highly just suggest a single contract. For me, I took 4 contracts. I'm taking between 2 to 4 contracts per entry here. Now, I do have a little bit of a call bias today because you can see this big yellow block right here. There's a major cup towards the top of the 749.60. So I will be trying to target that. Um, and our calls are starting to head upward. Currently my calls are up 17%. And again, I have it set so to look at my sell orders. I have it set so once the price hits 746.61 or above, it's going to sell 4 of those contracts, and then I'll have the additional contract to run to the sub side. Okay. But currently, all we're focusing on is just securing profits with these trades, being very, very consistent, having very, very structured entries and exits. And again, you could see all these rules on my Twitter page or X account, whatever you want to call it, at Cups and Handles. Now our exit looking like it is coming up here very soon. So I was able, again, I put these calls and puts on my watch list before we started this trading session today. Um, I mentioned that for everybody, but we want to be able to navigate to these calls and puts very, very quickly. Because if we get a push down like that, where we're only at that lower Bollinger for only a few seconds, you need to be able to enter on that. Okay. So I was able to enter on that at the 121 per. And we're just currently waiting for the call exit to the 20 month, allowing runners to run. Yes, the strikes I have on screen are literally what I am using. They're what should be taken. If you're wanting to, of course, kind of copy my trading today. So again, we're being very patient for our entry. If we don't get our 20 mile entry or our 20 mile exit just yet, and if we ended up pushing back down towards the lower Bollinger, then what we'll do is just add more calls and retarget that 20 mile. Our lower Bollinger is currently at the 745.52, so we are going to go ahead and add a couple more of these calls if we push down further, waiting very, very specifically for that level. Again, we want to see the actual candle push outside of the Bollinger here before we enter. So that would basically mean that the price would need to be lower than the 745.50 for us to enter continue or additional calls. Now in this situation, seeing how our entry is very close here, I pretty much have my order set up ready to go. So all I have to do is press buy when our level hits. Okay, so if we're getting our push down, which should be any second here, literally we'll wait till we push below. Okay, pushing below, grabbing that level. So I added again 2 more calls to that. And my current entry price is 119 per. So I want to go ahead and edit that. Our exit we have set to, again, we're going to sell 4 of these contracts. I currently have 6. And the 20 mile is at the 746.68, which means we want to be slightly below that. So I have my order set to 746.61. I'm going to move that up to 65. So 746.65. And second that that level hits, it will take 4 out of my 6 calls, and I will have an additional 2 calls to run to the upside above that level. And now we just be very, very patient. Yeah, you should definitely sell at the 20 mile with a smaller portfolio. Um, never risk it, and that's a big issue that a lot of um, you know, I don't want to say novice traders, but because this happens even to experienced traders, um, they assume that we see this giant cup on the hourly, and they assume, oh, we're definitely going to hit that level. I'm not going to secure the profits when I really should be. And then that level doesn't come, and then you end up in the red. Okay, so focus very, very strictly on the rules, even if you just have a single contract, even if the upside today is absolutely massive. It doesn't matter because that's not your target. Okay, your target is this 20 mom. Anything above that is just extra. You can't capture that extra if you only have a single contract. So kind of unfortunate about that, but it is okay. Um, focus on the consistency first, focus on our original exits first, and from that, you'll be able to build up the funds to be able to add more contracts later on. Also, good morning, everybody. I haven't been able to watch chat a whole lot. Do apologize for that. Now, potentially, we're getting another entry into the lower Bollinger, which is something that I will add to. Again, each time we get to the lower Bollinger, I will be adding additional blocks of calls, but only if we push that level. Currently, the lower Bollinger is at the 745.35. So either we get our push down to that level, and I'll add more calls, or we're going to push upward and we're going to be able to profit on our calls. One or the other. Do apologize if this is a little boring just watching the SPY here, but we're focusing just entirely on my day trading rules here, at least for this session. So we should get this pushed down to the 745.32. If we do, we will be adding more calls to that. I'm being very, very patient for this level. Not going to be adding early, even if it starts bouncing, which it shouldn't, should give us our level here. Lower Bollinger's expanded downward to the 747.23. So till we push that lower Bollinger, I'm not entering calls. Being super, super patient here and no FOMO, no emotions. Either a level hits or it doesn't. Okay, and our lower Bollinger has been hit. Looking for the push slightly below it. Okay, so my order went ahead and filled. Actually, I filled that a couple cents too early. I do apologize for that. But I currently have 8 calls. Our 20 mile is at the 746.43. So we need to change our conditional order. I'm going to have it sell 5 calls, and those 5 calls will be sold at the 746.57 because we do want to target below the 20 mod just slightly. And a very good call entry here. And my average on these calls is currently 114. So I want to go ahead and list that. Now we've made 2 entries, so I do want to really highlight that. And again, we're still targeting just that 20 mil to the upside. That can happen, Sean, but I'm not worried about that. Um, we're focusing entirely on the rules for today. Okay. And from the dictation of the rules, this was an entry, and this also was an entry. Um, again, today is going to be 100% about following um the rules that we have set. Now, I don't want to add too many more calls here because I don't want to overexpose, but I am going to add just a couple more. And again, if you don't have the ability to do that, that's entirely fine. Having the first contract still is still going to pull you a profit. And that's what matters at the end of the day is making profit. So I have 10 of these contracts. I will have our level take out 8 of them, and I'll be having 2 contracts as runners. Okay. No, today it, I know it's important to watch the VVIX, the HIG, and everything. Um, but today is just entirely focused on the rules. Um, I want to show you that these actively work in real time. Not trying to go for any home runs or trying to make any determinations about anything. We're just trying to follow the 4 basic rules here. Okay, because they are back tested. They do have literally thousands of trades behind them supporting them. And I want to ensure everyone understands that you could trade very, very structurally without having to, what I call vibe trade. I know some people think that's rude, but I'm sorry. That's what I call it. Um, I don't like vibe trading. I like trading extremely, extremely structured trades. Okay. Um, and that's what we're gonna focus on is just entirely very, very structured exits and entries. Because that's the thing I see people struggle the most with is how to enter perfectly, how to exit perfectly. So that's the entire goal of today's stream is to really identify very quality entries, very quality exits. And the technicals will provide those. Again, the technicals do um, account for what's going on with the news and everything else. Not that, the news and everything isn't important. It's always important to, you know, have that in mind. So, and we're just going to be super patient for our upside. Again, the upside today is very, very massive. Um, so I do like these calls a lot. I'm not really worried about these calls, um, turning down on us and us having to continue buying a whole lot more of them. Technically within the structure, which I'm not going to show here, but we do have a very large cup and handle built, and this is likely the handle of a smaller cup waiting to take us to um, that the upper 749 range. So the first entry calls still a little red, but the second entry calls are definitely helping pick up the weight quite a bit. Now I'm gonna mute just for a couple seconds to drink some coffee so I don't fall asleep on stream. But if anything changes within the next couple seconds, couple minutes, whatever, I'll unmute. So my average on the calls are currently 108. So I'll mark that down while I drink my coffee. Okay, so I see a lot of questions. I haven't had time to read them until I got my coffee. Second I got my coffee, read them, and I was like, oh, okay. Can I post the Bollinger Band settings? Yeah, so the length is 20, the width is 2. Length being 20 means it's tracking the 20 mile. No, I did not sell the calls yet. Again, we're not selling the calls until we get our exit. Okay, our exit has not come. Our exit is at this 20 mile. Okay, we're not selling until we get that level. Whether that means we push back downward and then have to go back upward, doesn't matter. We are not selling until we hit the 20. That's what our exit is. That's what we have to not worry about. Okay, is that this is our exit right here. Um You don't have to have emotions, FOMO, anything else about, oh my gosh, is that level gonna hit? Am I gonna be able to sell my calls? Am I gonna be able to profit? Or, oh my gosh, my calls are starting to profit. Maybe I should cut them out early. Um, just in case that level doesn't hit. Be patient for the level, okay? Patience. This is gonna be the patience candle, patience stick here. Be patient for the exit. Now my calls are in the green, only by 3%, but starting to head there. Now the market conditional order we have set, let me just double check. We have it set to 746.57. We should be seeing the 5 or the 20 pulling downwards slightly. So we're going to change that to 49. Okay, so the 746.49 for the 20 exit. And again, I have 10 contracts. I'll be selling 8 of them at that level. And we just be super patient. So I'm gonna drink some coffee really quick. Or I'm not. I'm super just like monotone, and people call this stream the ASMR stream sometimes. It's kind of makes me laugh. Okay, I'm gonna drink my coffee. We're gonna watch our price hit our exit because that's what happens with our rules. And we're going to then wait for the next entry. So I'll be mute a second, but I'm here. All right, I'm unmuted. I hope your daughter has a great graduation. And we're just being very patient for our level here. Sorry I'm not talking a whole ton today. I'm extremely tired. And everybody in my house has the flu right now, including me, but it's been hard dealing with taking care of everybody. So again, our conditional order is set to the 746.49. So we're roughly 50 cents away from our exit here. I have 10 contracts. I will be exiting 8 of them at that level. I have it automatically set up to do so, and I will be keeping the runners to run. And we're just being super patient for our level. Not going to sell before, we're not gonna freak out, not gonna do anything. Anything, just turn on some music, kick back and relax and just wait for the level. But I know many of you are at work or whatever, so just do your work, I guess, and wait for the level to hit. Now, once our level does hit, I should be around 500 profit on the day, which is, these are super easy trades. Um, Literally zero stress. Our entries presented themselves, you know, right within the technicals. No, I'm not looking at anything today other than focusing on our rules right now. Just entirely focused on our day trading rules. Which again, if you're a new viewer, you can't see those on my Twitter slash X account, at Cups and Handles. Should be the top post on there. Um, but that's what we're focusing on. Just super consistent trades. Now our 20 mile is starting to move upward a little bit, so that's very positive for us as, call holders. That's telling us our upside's expanding, even though it's only expanded by a couple cents. Um, that's still heavily alluding to that our price is going to hit. And again, we're exiting the majority of those contracts once that price does hit. You only have one contract, then that's going to be your exit. Yeah, getting some good strength within these candles, so we should hit our level literally any second now. And our 21 did pull downward very, very slightly, so I'm just going to very slightly change that level. Currently we have it set to the 746.49. We're going to set it to the 746.45. because we always want to make sure it's slightly below where the actual 20 mile is so that we ensure we get our exit. I want to look at the 1 minute structure. Oh yeah, that's creating, there's that cup, the handle going to, this is gonna start flying pretty soon here. But again, I don't want anybody getting FOMO. You only have 1 or 2 contracts. You need, you know what you have to do here. You're gonna have to sell at that 20 mall, take the profits, and we wait for the next trade for a safe setup, and you just continue doing that. So our level's about to hit here any second now. And again, I'm having 8 of these calls being taken once our level does hit. I'll have two to run to the upside. Sorry, I haven't been looking at chat a lot today. I feel like a space cadet right now. I've been up all night. Just waiting for our exit. Even if it's only 10 cents away, we just need to be patient. Okay. And those calls have been taken out. Um, Actually up almost 600 on the day so far. So out of very safe trades, I haven't had to stress literally zero. I've had to have literally zero emotions about today so far. And, I'm up 600 bucks. That's a very great day, and the day's not even over. Um, technically we've only been trading for a little over an hour and 15 minutes. So, um, that's super good. That's super good. It's super safe. And if you focus on your entries and exits, you will also have super safe trades like we are doing. Kind of put this here. So those are what the puts sold for. I want to see what the calls sold for. So I sold them at 124. So my average was a little less than that. I think my average, hold on, I could tell you my average. Should still be holding even with the 2 contracts. So my average was, yeah, the 108. So even only making a few dollars on that upside, it's okay. And the reason why is because we played for the potential. And if you do have runners, now you have runners that are going to take the upside if there is this massive upside to go. Okay. For smaller contracts and smaller accounts, I know that isn't the biggest win in the world. Okay. But it's all about consistency. It's that you can see where the consistency comes from these trades. You can do these trades, thousands of times, and you may only miss a few of those. Um, it's very rare that our levels and everything do not hit. Okay. So at this point, now we're kind of just waiting, waiting for either a new call entry or a put entry. Oops. Yeah, and I know you have a smaller port right now, and losing $5 is a big deal, but imagine losing, $100 or however much you paid for the contract. Um, to me, losing $5 is a massive win, and you played the potential too. Unfortunately, that first entry wasn't the best, but we still followed the technicals. If you would have been able to buy that second entry towards the bottom, you would have done super, super well. Um, but it's all about, we're playing for the potentials here. We're trading for the potentials. We're trading for what the technicals are literally telling us is available or not. And yeah, you could take these trades kind of all day as long as they, present themselves. Good morning, Tinted. So one thing I'm looking at here, even though I don't think we'll get a another call entry, is that we do have this cup and handle building. So that's what I'm looking for out of the runners, is that we can have that cup and handle take us upward into some major profits for today. Um, yeah, it gets nerve wracking. Adding to positions, and I can tell you yesterday was very stressful for me. Um, again, somehow this ended up being my largest win ever. It looks like a horrible structure, but the IV picked up right here massively. So those puts ended up being absolutely huge. Um, but when I was first entering, I mean, I want you to think about this in real time. Just do this, okay? So I started entering when I saw that price push up to the 741.14. Cool. That's above the high of the day pretty much. That should be an awesome put entry. Okay. Now it's at 742.42. Oh cool. That's an awesome put entry. It's still above the upper Bollinger. Oh, it's at 743.05. Okay, cool. That's another put entry. I'm down a lot, but that's another put entry. Oh, it's still above the upper Bollinger, but starting to taper? Okay, I can wait. I can wait. Oh, wait a second. Now it's at the 730 or the 743.85, almost the 744. Another put entry, I guess. And that's how that day went. Now I still targeted my exit towards this 20 mile. So as we started tapering down, I started looking towards the 20, started pulling back up, and it's like, okay, my exit hasn't hit yet, and it's only going up, 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 up. Exit finally hits, we secure it, and then massively secure the downside. So, yes, it gets stressful sometimes, but if you do follow your technicals, you will have the successful trades. And that's really what I'm trying to portray with this trading style is that following the rules here will pay out. Is my sound cutting out? I apologize. Yeah, this is the 5 minute time frame. So this is very, very specifically the 5 minute time frame that we trade on. The Bollinger settings are set to the length of 2, width of, or excuse me, length 20, width 2. Um, the width is basically measuring the volatility within the movement. Um, setting it to 2 is really, really key for this style of trading. But setting the length to 20 just means that you're tracking the 20 mile. which is, the most neutral stance of the moving averages. So now currently we're just kind of chopping here. I'm not taking any calls, not taking any puts. I still have calls. Again, I sold 8 out of the 10. So that means I still have 2 calls that are, you know, waiting to go. Now, I can take these. Let me step back. So with those 2 calls, I have a lot of different availability of what I want to do here. Either I can wait for the 20 ma and sell again at the 20 ma, or I could look for the structure of the day, which for me, I'm seeing very bullish structure. Okay, I'm seeing a cup with the handle forming, and from that cup and handle on the hourly, we have this massive cup. Okay, so that's what I'm targeting. I'm targeting the top of this massive cup with these runners. Now, if these runners start pushing into the upper Bollinger, what's going to happen? I'm going to have to cut them. Okay, even if I still see a full, $1 or $2 upside, it doesn't matter. Once I get to the upper Bollinger, that is the end of the road for those calls. Because why? That's when we start entering puts. Okay, we don't want to be, yeah, that just spells for disaster. Um, we use the upper Bollinger as the ultimate exit for the running contracts. Okay, because if there's going to be room for more calls, the technicals will provide it. Okay, it will provide us an entry back in the lower Bollinger or whatever it is. But until then, we just be very patient. And for me, I'm not putting a stop loss on these calls. So for example, if we start pushing down very hard, what would that mean? That would mean that technically I might be buying more calls because that might be another call entry. So I would just add to those calls and continue to look for that upside. So for the runner calls, we want that upper Bollinger. If we push downward, that just means we buy more calls. So the duality of all holdings sometimes. But that's the expectation here. Let me go ahead and re-chat. Yeah, if you miss the entry, you just have to wait. And oh my gosh, I almost just spilled everything all over my desk. Ooh, mini heart attack averted. Okay. Um so with my first put entries, I was entering 4 contracts at a time. With the calls, I started at 2 contracts at a time. In one of these entries, I think right here, I added 4. So I had a total of 10 contracts there. Uh, for the puts, I think I had a total of 8. Hold on, I can tell you exactly. And currently with these 2 calls, um, still weighing against me a little bit, I'm currently plus 400 on the day. So I could tell you how many puts. Hold on. So I had a total of 6 puts. Sold one at 191. Sold the other at 169. And sold the first 4 at 146 per. Okay, so those ended up being really nice. Now the calls weren't so profitable. They did get chopped up a little bit, but I still have my 2 running calls, um, which I have not sold yet. Yes, they're getting chopped up slightly. I'm not too concerned about that right now. Mickey, do you want me to look on the 5 minute time frame? Let's check Tesla. Yep. So what you'd be doing is basically put entry, put entry, put entry, put entry. I know it doesn't look pretty, but that put entry would have been highly, highly profitable. So this one we're going to check off as a success. Now for this next put entry, what are you dealing with here? You're dealing with a cup that's formed with potentially a handle, or we have just an overextension on that cup, which means that if that's an overextension on the cup, we're expecting a downward handle before heading up further. Well, where's that downward handle coincide with? Coincides a lot with that 20 mile. So even these entries up here where it looks very sketchy, you still target that 20 mile range. That's still 100% what you do. I'm gonna say this name wrong and I do apologize, but is it Chong Wen? Um, I'll be happy to post the screenshots after today's trading session of all the buys and sells and everything on the contracts if you are interested. More than happy to do that. Now again, with this cup and handle, we're looking for the breakout. So I'm going to delete this arrow and delete this potential entry right now. What we're looking for is a call exit up here. Now I'm not going to set a conditional order, but I probably should. You know, that's good mechanics. So I'm going to set a conditional order so that if the price goes above, and we don't want to target below in this situation, we want to target above. So above the upper Bollinger. The upper Bollinger is currently at the 747.99. So we're gonna say 748.01. Okay. So if it goes above the 748.01, then we will have it automatically take those last two contracts. And now I don't have to worry about setting up any orders. I don't even have to really worry about watching the chart too much right now. And again, if we push up to this level, which I have a very high conviction we will be, because this is going to be forming a cup, then what will this open up? This will open up a put entry where we can then target the downside again. So that will be the next trade that we're looking for. Yes, this works. This works for futures as well. And if anyone does have any questions, it's a great time to ask because I'm pretty much going to be focusing purely on SPY and trading within our technicals um, for today's stream. Yes, I have my conditional order set to the 748.01. I actually want to boost that up to the 748 16 just because I do see the top of that cup and it's very, very, very likely it's going to go there. So I want to target that. So targeting the top of that cup, knowing that cups usually push above slightly, that means we're just going to target that level exactly. So the 748 16. And we never want an even number, so it needs to either be 15 or 17. I'm going to set mine to 15. Always ensure that your conditional orders um, are being placed on odd numbers, not even numbers. Um, Dealers very, very specifically like to focus on odd numbers just because from a retail standpoint, it's easier to set even numbers. And for some contracts, they only allow for even numbers to be set. So, um, yeah, I always target odd numbers. Now, as buying stock and holding long term, use the same strategy. So this is very much so the daily strategy as well. Okay. And we're gonna look at the daily time frame. That was a stock buy, stock buy, stock buy, stock buy. Might seem like you're just buying nothing but dips here, but what does this turn into? You know? Massive, massive, massive upside. Okay. Um, we use the same ideology when trading options, all except instead of going to the 20 mile, we focus more on the 5 mile. So from lower Bollinger to 5 mile, lower Bollinger to 5 mile, lower Bollinger to 5 mile. If there's very, very quality room within the 20 mile, then we will try to target that 20 mile. But the daily time frame does work a little differently. Um, with the 20 mile being roughly every 20 sessions, then that means that we have a little more leeway in terms of how to determine our exit being at that 5 mile or at that 20 mile. So currently with our calls, we're just again waiting for our upside, and these are the runner calls. Okay. If you took profit on the first calls, like we should have, okay, everybody should have taken at least 80% of their contracts out at that 20 mile level. Um, Allow the runners to run. We'll set up some puts at the top here, allow the handle to pull down, catch the breakout, and very likely have a very good day. And again, I just have my conditional order set to that 748.15. Again, set it to an odd number, so if you're targeting the 748.16, have it set to 15 or 17. Sorry, I'm just taking this. Now, I am only going to stream for about another 45 minutes, maybe an hour tops. Um, Unfortunately, my daughter does have the flu right now, and I will be pretty much the only one to be taking care of her today, so I won't be able to stream and do that at the same time. unfortunately. Um, so it's very likely we're going to get this last trade in here um, before I have to end the stream. So I just want everybody to know that. Um, just a reminder, there is no market on Monday. It is Memorial Day. So the market will be closed. So I won't be streaming on Monday. Um, I'll try to see if I can make up that stream on Wednesday, but I can't make any promises just yet. I have no clue um what I have going on next week too much so far. So I like shares as well. Um, but you can make far quicker money out of options. Um, to get the same amount of money that we're making currently here with options, we'd be having to trade at least 100 shares each entry. So for example, if we were shorting the SPY up here, we would have had to short 100 shares per put we would have originally took. Okay, so is it easier to spend $119 to take that same short position, or is it, better to go spend, $7,400? They're both going to do the same. They're both going to gain or lose the same amount of weight, but it just makes it a lot easier for smaller portfolios to take some of these positions. Um, Now for shares, I do like to focus on shares, but I focus very, very primarily on buying long-term dips, um, which means that there's a very, very strict guideline to when I enter equities, and those are usually dips that I hold for. So, um, not so much to scalp trade with shares. You can do it, but it's just not something that I currently have a whole lot of interest in right now. Um, I used to do that a lot in the past. Back in 2022, 2023, pretty much all I was doing was trading like all those biotech companies that were squeezing and um natural gas, all sorts of different stuff at the time. And made some good money off of it, but it takes a lot of time and effort to track all those trades. Whereas, I kind of have a very, very clean mastery of how to trade the SPY, and trading the SPY is literally one of the most lucrative trading experiences you can have. Um, as an options trader, if you are, actually trading it correctly and not vibe trading, um, there's a absolute boatload of money to be made. So that's why I like trading options. But I do take shares as well. Options can be really scary. Because again, with a share, the share really can't go to zero unless the company goes bankrupt. Um, and you can always hold a share and see that weight returned again. It's kind of like when Micron pulled up to, I don't even remember, 800 something, whatever. And then we saw semis and everything dip down, and I think Micron went all the way to 660, maybe less than that. I don't remember. But Anna in our chat is holding some Micron at that 700 something range. And I know she had a major concern because it's like, oh geez, I'm down, I think like what, 60 or $80 a share. And it's like, yes, that's a big deal. That's concerning. But look at Micron now. Um, I'm pretty sure she's back in the green with those shares. And because, Micron's back at 766, it's a great company. And you can navigate shares a lot better. Okay, options, you don't get a whole lot of room. Um, you get your entries, you get your exits. If you miss those entries, they're gone. If you miss those exits, they're gone. Um, and you could really suffer by missing those exits and entries. Yeah, exactly. You buy stock and your portfolio is going to fluctuate, but it's an equity. It's a security. It's something that you're buying to hold, you know. People don't think about buying securities in a physical form, but it's basically like going out and buying gold or silver, except you're buying shares of a company. Of course, you're not able to physically hold those shares, but your brokerage does, and I mean technically you can get it transferred to um yourself in other ways, but we're not going to really talk about that. Um, but buying shares is like buying an equity. Can you day trade silver coins? Yeah, you can. Um, is it going to be the best thing to do? Not exactly. Um, can you day trade silver options? Absolutely. Can you make an absolute killing off of day trading silver options? Yeah, absolutely. So, um, it's really about the risk and how you want to trade. I guess would be the best way to say it. We're not going to be averaging those just yet. Hold on. I want to look at, I think, and what the symbol's W day, I believe. So let's see. Yesterday, probably bought on a dip. Yeah, I mean, again, I see like massive, massive upside within W day right now. Um, should absolutely be holding those for quite a while. Now, I'm not worried about my calls getting chopped up with the theta too much because price action is going towards this cup that I'm assuming. Um, I know someone mentioned a potential head and shoulders. I think the liquidity is definitely there if we get some bad news, but I also see, again, massive liquidity for this major cup. Um, especially that we did invalidate the right shoulder on this major head and shoulders. That's telling me, okay, with that invalidation, that's turning into a bullish structure. With bullish structure, we need to be bullish. So, um, I'm not exactly too worried about this turning into a head and shoulders. If this pulls down again, then I'm just going to buy calls and ride those back up. 5 minute time frame looks fine here too. Should hit that cup at the 747.59 very shortly. From there, build a small handle and head up to the 748.16. So yeah, I'm not worried about that. These calls should be fine. So that's a great question. Um, you watch listed the 747 calls and the 746 puts. Always at the target, and do you ever go further out of the money? So why was that the target? Let's just get rid of all the drawings for a second. And let's look at the pre-market. So in the pre-market, we see that our 20 ma is basically just about to turn 746. Okay. So while we were above that price, um, that's telling me, okay, that 746 is a target. Um, so I wanted to target the puts around that price. And I was looking towards the upside within some of these larger cups that we have formed. And that's what really gave me the conviction for the 747 calls. Um, Seeing how the lower Bollinger was at the 745, um, with the mid band being at the 746.53-ish, it was at 746.50 something at the time, so very close that same level. But it's telling us that we can target that 746, 747 range on both ends. This could have been the puts and the calls. Um, for the puts, I was basically getting a slightly more less in the money option. For the calls, the exact same thing. Um, but basically, I'm targeting what's within the day for the movement. Yeah, you have to stick to the rules. And again, they are on my X page, uh, ups and handles. But follow the rules, and you will have consistent trades. Can't get emotional, can't anything else. You just have to follow the rules. For the Soxus 9 calls, we're gonna be averaging into those after this push to the upside, not today. So very likely we're gonna be taking a further up strike. If you can get further downside today, then that's going to be a good time to exit. I did discuss that, but I know that when we were at that level, we were focused on getting out of the puts, entering calls, um, that I may not have mentioned it again, but that was a very, very prime exit to exit some of those positions. Um, even if it was a loss. We can't fight this upside market. They've been working on breaking a lot of the bearish structure, and even though we're due for a daily 20-month retest, um, the concern that we originally had was that semiconductors did hit that level. Okay, so semis hit that level, but the SPY and tech didn't, which gave semis the ability to bounce really, really hard. Um, that's what happened, and it took the SPY and QQQ with it. So now we have to be patient again for the next 20 mile retest, which from this point, it's looking like we want to get ready to push the upper Bollinger again prior to that. So we have to be very careful with our bearishness for these longer trades right here. Yes, I would just go ahead and cut a lot of those puts. Um, we'll find entry back into them, but we're not gonna fight semis going absolutely crazy. Even if you have to take a loss, don't worry about it. We will get you back in profit very soon. I help if I show the drawings. Still gonna keep the patience stick. We'll put it up here this time. That's where the patience stick goes. Again, we're expecting a very small pull down on the 1 minute time frame because we are getting ready to close this cup. So once we close that cup, very small pull down to very likely hitting our level. If you're still in the calls, then technically you can exit at any time. Oh, the Sox calls. Yeah, okay. Yeah, sorry about that. I did mention that earlier this morning, but I really should have discussed that again when we were down at the low. That was really a prime opportunity to exit a lot of that stuff. Yes, we're still adding to drip. That is a big position, almost at 20,000 shares for that. So, um, I'm gonna be holding that sucker for dear life right now. Yeah, I would sell those bearish positions. Unless you're using them to hedge any form of upside call. That'd be the only reason why I'd keep them. I do have some longer upside calls, so I do have a couple of these puts still going, um, that are dated. But at this point, they are a hedge. The calls were originally a hedge position, and they ended up turning into the primary positions when we got these major pushes upward. Um, it's okay. Even 100 shares adds up, because 100 shares, it's 400 something right now. I'm still fully expecting that to move at least to the $7. Okay. Well, with 400 something shares, that's going to be like 200 something plus profit. And then you get to sell a CC on top of that. So you could sell a CC that's basically right at the money. Um, and you're going to make really good money on those shares. So, and that's only if we get to the $7. I'm expecting it to get, potentially to the 10 or $11. So there's that cup top we talked about, letting it pull down, and then we're looking for a bounce to the upside. And again, I still have my conditional order set for these calls. The remaining calls, these are the runners for the 7:48:15. So in terms of trading today, it's been pretty much zero stress. Our entries have been very clean. Our exits have been very clean. And now we're just looking for additional profit on the runner. It's okay. If you don't have a hedge, then just go ahead and exit out of those. Yeah, and don't worry about losses in this moment. Again, if we sit here and focus on very, very consistent trades like this, then those losses are going to mean nothing. Okay. Um, we'll rebuild all the accounts, all the portfolios that are not doing so well by focusing on very, very consistent trades like this. Yes, strip shares are definitely a good buy. Um, I've been trying to add to them since we hit that 4.1. Um, but I still like the drip shares a lot. Um, again, drip is kind of in that position where it has a lot of room to run and it hasn't even started yet. Oh, Nimble Genius. So I didn't see your question earlier. I'm sorry. Hopefully you're still in the chat. Um, Options are a very difficult beast, okay? And I know what we're trying to focus on here is very, very consistent trades, but options are a very, very complicated instrument, okay? They have a lot of different weights behind them. They have a lot of different reasons to why they move. Now, the simplest thing I want you to think about with an option is that with the strike on a call, the call holder is expecting it to pull above that strike. So for example, if I had 746 calls, I'd be wanting my price action to pull above that. Okay. The reason why is because if I'm wanting to exercise the option, that means I turn the option into shares. That means I could buy the shares at 746 a share, even if the price is 748, 751, whatever it is. Um, but that's also how the profit is generated within the contract too. So there's many different weights to it, and I'm making this sound very simple. But when there's that room between the actual exercise strike price and what the market is at, that gives the derivative option itself value. Okay, so this is saying that currently if you had a 746 call, we'd be, $1.60 above that in terms of the equity price. So the options are going to reflect that same type of gain as if you were holding that 100 shares. So when you buy an option, you're basically buying temporary ownership of someone's 100 shares, whether you're taking puts or calls. Um, you're buying the ownership to be able to exercise their shares. Uh, your contracts will profit if your strikes go above their levels or with puts below their levels. Because that's showing that you could exercise that contract, take those equities, and actually have that much money. So hopefully that makes sense. Oh no, you don't owe me anything, don't worry. This is not why I do this. This is how you know I'm not one of those fake gurus, is that I'm really not out to take people's money. It's like we're working on an AI and everything that I could probably easily sell for like $1,000 a month, and we will be releasing it to the Discord for about $60 a month, including all the other stuff. So not doing this for the monetary gain in terms of teaching. So don't think about it that way. Just I want you to just absorb everything you can and become the best trader you can. Yep, these calls are doing very, very good now. They're currently up 60% for the two that I have going. Um, Again, my average on those calls were 108. They're currently 174 per. By the time I get my exit, they'll probably be about maybe 190, 200 per, which means that, that's going to be roughly $90 profit for those two runner calls per call anyway. So that's why we take we take a big chunk of the profit at the 20 mom because we do want to be able to turn our risk upward. Okay, we want to be able to kind of risk on with these runners to really make some major profits. Um, but we covered the initial position, so it's not like we're going to lose out on these options if they decided to just instantly dump the market or something. Even if those options kind of went to zero, it's not the end of the world because we've already made, the profit through the original options. So our levels should hit pretty much any time here. Again, we're looking for this 748.15, and I'll tell you when my contracts. Oh, you'll hear a little ding, but if you have your sound turned up, well, of course you have your sound turned up. You're listening to me, so um, you'll hear a ding when my options clear out. But I do have those set to the top of that cup essentially. And we will get ready to start targeting some puts when we do push this level. So the upper Bollinger is currently at the 748.15. So it's literally right at our exit level, which means that I am now starting to put my hand on the 746 puts again and getting ready to set up a buy order. Because if we hit our level, then that creates the conditions for the put downside, which I want to be able to capitalize on. So look for our exit, but also our entry. And just be super patient. Again, we want to see the market pushing above the upper Bollinger here. Once we get this put entry and all exit, um, I'm going to take a very quick AFK just because I do need to check on my daughter and everything really quick. But I will be streaming another basically like 27 minutes. I will be ending the stream today around 12 p.m. Just because again, I do have to watch my daughter and she has the flu right now, so I can't really trade and stream while doing that. Put a limit order in between the bid and the ask if you see a large spread. For workday, you'd want to enter on the lower Bollinger. Again, the lower Bollinger on the daily time frame. Usually I look for the day 2 lower Bollinger because that's where you get a lower low, um, which gives you pretty much like most opportune put entry or call entries. Um, I don't know if you guys are gonna get that again. I'll check in a couple minutes here after we get our puts set up, after we get the calls exited, and the price action that we are anticipating here. But we're gonna be very patient. I'm gonna mute just a second so I can drink some coffee, but if our entry comes up, I will quickly unmute and choke out the order to engage the puts. So I'll be AFK just a second. No, it's not time to enter the puts. So randomly, make sure you have the rules that we have printed. Um, again, they're on my Twitter page. You can find that at Cups and Handles. Um, no, we have not pushed the upper Bollinger yet. You're very welcome, BT. I hope you have a great weekend. Thank you. But no, we have not entered the puts yet. We're waiting for the upper Bollinger to push. We do not FOMO into positions. We wait for our levels to hit. Oh, it's okay. Don't worry about it. Just make sure, so one thing I really want everybody to do is basically take that list of four rules that I wrote out. I'd really like you to print that out and keep that on your desk or wherever you do trade, whether you shrink it down into a smaller card or something, whether you write it out and I tell everybody write these rules out and laminate it. Um, it's going to help you a lot in your zero DT trades. Okay. You're very welcome, fisherman. Jackson, that's because I'm using the Haken Ashy candles. I do not use standard candles, which might be why they look different. Um, I heavily prefer the Haken Ashy candles. I don't know if that's because I'm autistic or what. I just they show the structure a lot better for me. Um, so I use those. See, you'd be seeing the selling right there. Um, while for me, I'm looking for the structure here. The rules are on my X page at Cups and Handles. They should be pretty much the first post you see available. I would not long the video here. Again, I only long at the daily lower Bollinger when it comes to equities. It's very, very strict on when I take my entries. I just like the Haken Ashy look a lot better personally. Um, let's change it to standard candles for a second. It makes it so difficult for me to look at this as a bullish cup. If I have standard candles here, like, oh geez, there's a lot of selling here. Is this bearish? Oh, well, there's a little bit of buying here, but a lot of selling here still. Um, makes the structure kind of wonky for me. Whereas this is very clear buying, very clear selling. It makes it very clear of what's actually occurring within the price. Yeah, that'd be a really good opportunity is waiting for this handle to form. So once we hit the top of the cup, wait for that handle. And that would be a very opportune put at exit because your puts are going to be gaining a little bit more IV. Um, and that way you're not exiting at the top. Any dollar you can get back adds up. Again, being super, super patient here. Should be seeing this smaller micro cup forming to the upside, which we talked about. We talked about how we were going to hit the top of this cup, very likely pull down a little bit and then start pushing upward. We did not hit the top of the major cup already, so I'm not concerned about us missing that level or anything. And within the 5 minute time frame, it's telling us within the Bollingers that we also haven't hit that level yet. I definitely do see SPY dropping on a larger time frame, but the issue is that We did a 20 mile rejection essentially on the daily time frame, and let me just pull that up really quick. Going to hide the drawings just for a moment. But we had this rejection, and from this rejection, we're now looking to form this cup. With this cup forming, this is telling us very likely we're going to consolidate downward slightly and then form a handle to the upside. Well, what's that upside? It's the upper Bollinger. The upper Bollinger is currently at 755.58. When we consolidate downward and pull back upward again, that could be all the way at the 765, 770. So, would I continue to short the shares here? Absolutely not. I think it's better to take the loss on those, um, and wait for that upper Bollinger entry at the top. Okay. Um, that's the most ideal short position you could do, especially with the drawdown and everything. That can get really risky, even if you have the money to do so. Um, so I think it'd be better to exit, but if you're wanting to exit today, let this cup finish. Let us get this handle downward, and then from that handle downward, um, that would be a good opportunity to exit those puts or to exit those shorted shares. We primarily just use the day to like for the order time frame. Um, I primarily just set my orders to the day because the market changes day from day. I don't want to have an order on something that potentially the target changed on it. Um, so the oh, are the rules not showing on X anymore? Hold on. They should be. Yes, I still have some Spaxu shares. I'll be holding on to those for a while. I'm not worried about downside in those right now. Yeah, it's still showing that my post is up. So the rules should still be there. Very welcome. I don't see the SPY hitting the 20 mile in terms of the daily time frame for probably another 1 to 2 weeks now, unfortunately. Now, the reason why I don't have the moving average rules on my, 0DT cheat sheet is because there's a lot to go over with the moving averages. Um, I mean, I'm literally writing a whole major section of my book dedicated to that. So it's not anything that's simple enough to write a couple rules over, even though that there are some things that could be stated. Um, it's a very complex subject and it's something that requires a lot more writing. Now, I have not put any ads on this class or anything, so if you want to check back on the VOD, it should be, without ads or anything. So Hopefully not annoying to watch. I hate ads on learning material because it's just like right in the middle of something. You start getting it at it, it just throws you off. So again, we're still looking for our level here. We're going to be super, super, super patient. Now, I am only going to be streaming for about another 13 minutes, okay? Because I do need to go take care of my daughter soon. So, if our exit does not happen here, and if our put entry does not happen here in that time, then I won't be taking those. I'll just be, you know, waiting for probably the call entry later today to get calls into. Um, but there definitely is room for puts today once we get to the top of this cup, whenever they decide to push us up there. We do have the structure building for it, even on the 1 minute time frame. We have a double bottom. Cup's been forming very well, so we should see that cup to the upside. Yeah, it's a huge thing to provide people. Um, but to be able to make that set of four rules makes it look really easy when that took literally thousands of trades, thousands of hours, blood, sweat, and tears. Um, because I had to learn this all on my own. Okay. This is something that I don't really even think you can Google. I haven't tried too much, but I haven't been able to find this type of trading style on Google or anything. Um, so this was something that I specifically created, and it works very, very well for me. So as easy as it is to just put in four little rules, at the same time, it's like those four little rules hold a ton of weight to them. Still being super patient on a put entry and call exit. And we have a ton of bull structure built on the day, so I'm not too concerned. Now I do know that the new Fed speaker will be, I believe, giving a speech today, but I don't think that's until later in the trading day. Oh no, I guess it's beginning as of 5 minutes ago. Yeah, so they're swearing him in now. So we will have a new Fed chair. The AI release, we're still working on it. Ideally we're trying to get it about 3 months. Um, can't really promise anything until we fully sit down and hammer it out. There's a lot to be done. We're not just making a stock picker. Anybody can make an AI stock picker. We're building a very, very, very advanced system that's going to have a ton of very deep correlations built into it where it has to follow the rules. It can't just spew garbage out of the abyss. Um, so it's going to be very, very strict. It's something I've already spent close to $10,000 on, and we are building, basically a whole rig for it. Um, Having it learn a lot of back tested data, the whole gambit, you know. Um, it's going to focus very, very, very strictly on my entries and exits. It's going to be able to pull the totality of the options market. It's going to run Black-Scholes on the options to find out, where the dealers are really hiding the strikes, all that good stuff. It's going to be coming with a dashboard. Um, on the dashboard, you'll be able to type in basically how much you have in your portfolio, and the AI will then go through the market and try to find the best opportunities based on your port positioning and or your portfolio size to create, you know, low risk, high reward trades. So very much not the conventional stock picker AI. Um, it's going to take a lot of time. It's taking me a lot of money. Uh, anyone wants to help donate? I'll add you to the founder list, but um, there's someone that I really do wanna basically pay to work on it full time, um, which I haven't been able to yet. So yeah, the lessons are very painful, and unfortunately, with the stock market, you do have to do a lot of this trading and everything firsthand to really see how it works. Um, but that's why I try to teach what I teach. I've literally been to the dredges of depression and everything over stock trading before. Um, it's taken me literally years and years and years to learn how to be super, super consistent. And that's why I'm so focused on teaching people now, because I do kind of know the opposite side of what the stock market looks like. And it's a very depressing place and doesn't feel good. Um, Another big reason why I focus on teaching and not trying to really profit off people is because I eventually do want to make this a certified trading school where, it'll have a full curriculum, it'll have, a actual backing to it where we try to get you into fund or into firms and stuff like that. So the real end goal is to, create that full teaching school or, that full trading school, which is going to take years. It's going to take a lot of money. So nope, I'm not moving these conditional orders up, even though our upper Bollinger is expanding. I simply want the top of that cup. That's it. Another big reason why I'm so focused on teaching trading is because AI is starting to take a lot of jobs from people, and it's only going to continue. Um, it's not like that's going to really reverse directions. Um, most of the tech CEOs are talking about every single first world, citizen having their own personal robot, like literally a bipedal robot, assistant. And people might think that's crazy right now, but people also said that was crazy about having phones in your pockets. And now we have phones that are better than, you know, the most top of the line gaming rigs of, 10 years ago. So don't really question tech's ability to be able to do what they need to do. Um, but that also means there's not going to be a lot of jobs for younger generations. Um, But one thing that always will be available is the stock market. And being able to be consistent with that is going to create a lot of jobs that, you know, people really didn't have access to prior. So, yeah, good intentions overall. My sound's going up and down. I have to fix that. I've been having some issues with my laptop, so over the weekend I'll get that fixed on or fixed up, or I'll just pull out one of the PCs, finish building my desk and just get that going for the next stream. So one or the other, it will be solved. I think AI has the ability to eventually trade very, very well. But it really depends on who's building the AI, what correlations they're setting, what levels they're looking for, and even their own personal experience of trading and knowing how the market works. The reason why the reason why I am so consistent is because I've learned how these algorithms trade very much so. Basically to the T. If you were to, watch the actual Aladdin systems trading, they'd be basically doing this exact same thing, um, just in a different way. Okay. So what we do is we're basically tracking what the machines are doing, whether the machines are selling, whether the machines are buying. And so can an AI do that better? If built correctly, absolutely. But we need to be able to still know the market ourselves. We still need to be able to um, handle all of this ourselves, because what if there's a time you can't rely on AI to trade for you to make money? Then what? Um, then you just can't trade, right? Well, I don't want that to be the case. I want everybody to have this skill, kind of like how it used to be, where everybody used to know how to sew things and everybody used to know how to do a little bit of construction and blah 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 blah. Everybody should really have some basics of, basic understanding of how to be consistent with your trades. Whether you use an AI or anything else, that should elevate what you already do rather than replace you to do it, if that makes sense. Yeah, and that's great, Sean, and hopefully we can continue um, getting that portfolio grown and eventually getting that 500 a week to 700 a week to 900 a week to 1,000 a week, and just slowly keep that growth going. And the thing about AI too that I really don't think a lot of people understand is that AI is 100% generative. So unless you teach it and train it, it's basically going to be pulling from the abyss. I mean, I could tell the AI right now that all sorts of different rules and everything that are correct are incorrect, and the AI will find a way to agree with me. Okay. Um, it will fit my bias. Okay. Because it's pulling from the abyss to fill the conversation. Whether that conversation is extremely important or not, it's still pulling from the abyss to generate that. Now, the difference between good AI and bad AI is that a lot of people assume that generative process is a smart process. It's not. It's like Imagine telling an AI to draw a banana. Okay. Well, what's it first going to do? It's first going to somewhat get the shape of a banana. So it might go like that. Okay. There might be a banana in there, but now we have to start forming it better. Okay. Now we have to start, actually making it look more like a banana, which no, this does not look like a banana, but you get the point. And then it keeps going, keeps going, keeps going, keeps doing the revisions until it looks like a real banana. Okay, and that's the generative aspect. And it does that with the conversations too, is that when you ask it a question, it's thinking, how do I best respond to this? What is this question um wanting from it? It goes through its queries and it might even generate multiple responses before you see yours. Um, but it's continuing to generate until it creates a response that looks real. Okay. Same with the images, same with everything. That's how AI works. Um, the difference between making a smart AI or not is putting a lot of correlation into the AI where it now has more of a thinking brain, where you build rule sets, you build um things it can't deviate from. You build things that, consistencies. And it then becomes more like a child where it's a learning, it's learning and growing off of those correlations, off of those consistencies, rather than just full on generative. So I worry about a lot of people trying to build um trading AIs because I think that while there could be a lot of merit from it, there could also be very, very, very significant downside if that AI does not correlate something perfectly, which within the market there's literally thousands of things to correlate at any one moment. So that's my spiel on AI. Now again, I am trying to look for this exit here before I end the stream, but technically I should have ended the stream about 4 minutes ago. So if there is any final questions or anything, right now is a very, very, very opportune time to ask. If not, then I will be ending the stream soon, regardless of whether we get the exit or not. I'll just be having to watch it on my end, unfortunately. But I do thank you all for taking the time to, you know, come in and learn this morning, and hopefully you were able to take a few good trades through that. This is something we do Monday, Tuesday, Thursday, and Friday. So if you have any trader friends or anybody who wants to know how to trade, I'm really trying to grow the group. I'm really trying to grow um the community and really get everybody off to a good start. So if you know other people who would be interested in listening to my trading ASMR, um, definitely give them a share and let them know that I exist because it's been hard otherwise. Yeah, you're very welcome, everybody, and I hope you all have a great weekend too. Going to keep the stream on just for a couple other minutes just in case I do get a final question, but again, if not, thank you all so much for watching. I appreciate all your time. Still looking for this to form a cup. With the 1 minute time frame being on the lower Bollinger twice, it's technically telling us wants to push up a little bit. So still looking for that upside here. All right, everybody. We know our targets of the day. We know when to exit and enter. And hopefully you all take that rule sheet and go print it out. Um, Again, that's something everybody should have on them. And if you follow those rules to the T, you will be doing well with your 0DT trades throughout the majority of the time. There will be some trades that are a little harder than others, like the one I described for me yesterday. Um, but the technicals still apply and they still hold true. So, okay, everybody, have a great weekend. Enjoy your Memorial Day, and I will talk to you in a video on Sunday. I look at the 5 minute purely for 0DT. The 1 minute time frame, I look for additional structure. But have a great weekend, everybody. Um, Thank you very much for joining, and I will be putting out a video on Sunday. Those Sunday videos are super, super crucial. I go over basically all the data sets, all the earnings, the outlook of the market. So, um, you can give those videos a watch. That'd be great. It would help boost the channel and everything else. Not that I'm trying to promote too much, but it does help. Um, so thank